So how do you know real estate investing is for you? There are other types of investments, you know. Hi, my name is Jeff Gunther, and in this short video, I'm going to share with you 5 investment considerations for evaluating what market you should actually be in. Are you ready? So we're talking about evaluating investment types, but before we get into the 5 considerations, we should probably be clear on what an investment is. Let me give you a really simple definition of investing. Investing is limiting current consumption in favor of future consumption. So you can think of it this way: investing is limiting current consumption, what I spend today, in favor of future consumption, the wealth that I will have tomorrow. With that definition in mind, let's look at 5 considerations that you would want to match against every one of your investment opportunities before you make a decision on which is going to be best for you. You'll rate them high, medium, or low. The first one is, of course, risk. Number 2 is appreciation. Number 3 is liquidity. Number 4 is management. And number 5 is yield. I'll break those down a bit for you, and then I'll give you a list of different types of investments that you might like to measure these against. First of all, risk. We know there's risk involved in all investment activity. Some investments, however, are much lower risk and some are higher risk. You will need to determine what risk is appropriate to you. Is it high, medium, or low against each of these different types of investments? Number 2 is appreciation. Now, appreciation means if I buy something today, is it going to be worth the same in the future, or is there a reasonable expectation of it being worth more? Appreciation is just value increasing over time through inflation and other factors. So some investments are not expected to appreciate at all, and some actually go down. You can rate these. The third, of course, is liquidity. Now, liquidity means how easily can I enter or exit this investment? If I have an immediate cash need, can I sell this investment and get out? Again, some are easier to move in and out of than others. Liquidity is the ability to convert your investment to cash quickly. The fourth is management. Some investments require little or no management at all, and some are much more management intensive. They'll involve more of your time. So as you look through a list of potential investment types, you want to consider how much of this time is going to take, of my time is this going to take, and am I willing to invest that time as well as my money? So number 4 is management. And then number 5 is yield. Yield can be thought of as cash flow or dividends, the amount of money that I've got coming in, the income that I've got coming in from an investment. Yield is different from appreciation because yield is what you receive as you're going through the life of the investment, and then when appreciation comes at the end, those two amounts get added together to tell you your actual return on the money that you've invested. But you can go through a list of different types of investments and evaluate against these 5 criteria, which are risk, appreciation, liquidity, management, and yield, and rate them high, medium, or low. If you have a piece of paper at home and you've written those 5 across the top, you can then list some of these that are showing up beside me as investment types and evaluate them. So a few might be stocks, bonds, investment or insurance products, perhaps cryptocurrencies, commodities, of course real estate, business as an investment, precious metals, collectibles. There may be others. If you would like to do that exercise, I can make it a little bit easier for you, because if you look in the description below, we have a link. If you click on that, you can download and print a PDF and do this exercise for yourself to help you determine if real estate investment is right for you, or maybe there's something that's even better. So I encourage you to do that little exercise. It'll take you a few minutes and it might show you something you hadn't considered before. I hope you enjoy this little exercise in evaluating investment types.